So that was the decision yesterday, and of course we had that studio conversation before and after the decision. Now let's get another perspective to it. The Chief Executive Officer at Cowrie Asset Management Limited, Mr. Johnson Chukwu, joins us to share his own perspective. Mr. Chukwu, good morning and welcome to the program.
Good morning, Enid. Thank you for having me.
Good to have you. So I'm sure this is in line with expectations. I mean, the whole stance of the CBN, even though we've seen 3 consecutive decline of inflation.
Yes, absolutely. I don't think anybody would have expected the central bank to move in either direction, either tightening further or losing, given the fact that if you look at the macroeconomic environment, yes, granted, we've seen a 3 months consistent deceleration in inflation rate, but the inflation is still at 22.22%, which is quite high. The CBN target is to achieve a single digit. So we're very far from a single digit. But beyond that, you also look at economic growth. Economic growth is still relatively tepid. At the 3.13% economic growth, that's just about our population growth rate, or just marginally above our population growth rate. And then you still deal with the pressures on the foreign exchange. Today, we've seen some level of appreciation of the local currency, but expectedly, now that the FARC had been released about 1.8 trillion naira, the highest so far, we should expect pressures on FX, and that will pass through on commodity price, on average prices. Then you have to deal with the issue of food production, which has not improved materially. If you look at agricultural GDP growth rate, it was 0.07%. And that is a pressure point when you talk about Nigeria's inflation, because the pass-through effect of low growth in agriculture is high food prices, high food inflation, which transmits into all item inflation. So I think it was a most expected outcome, most expected decision they took, because we can't afford to tighten further now, given that we still have relatively weak economic growth. Neither can we afford to loosen, because we still have FX pressures and we still have high rate of inflation.
So the CBN there is talking about a single-digit growth. Single-digit inflation rate. Does that look anywhere close when you look at, especially, we see the macro, but also look at the micro, and you did talk there about the issue of food production, a major driver. So even when we see it does seem like headline inflation is declining, food inflation is not, and that, of course, tells us where some of those pressures are coming from. And we still see the issue of insecurity in the food-producing areas of the country. So do we see this single-digit inflation anywhere close to us?
We've not had single-digit inflation figure for decades, and it's not likely going to materialize in the near future. In the first place, some of the assumptions the central bank has made, including that they expect further decline in PMS price, it's based on some other assumptions that they may not crystallize. One of which that crude prices will continue to decline. That may not happen. I mean, the announcement, some of the statements you made in your program at the start includes that we are seeing a reversal in the decline we saw in crude prices, because Russia, US is threatening to impose sanctions on Russia if the war does not stop, and as well as there is some level of agreement between US and Japan that could open up trade, reduce the trade barrier that US is imposing. Some of these factors will lead to increase in demand for commodities, particularly crude. And that means if crude price goes up, PMS price will go up. So that assumption is neither here nor there. Then the other aspect you have touched on is the issue of food production. We still deal with very heightened level of insecurity in the food base of the country. Then until that is addressed, which I do not think that problem will be solved overnight, maybe we could see some level of improvement, but it's not going to happen in less than 1 year. So these factors, high food inflation, unstable exchange rate, even if you have had some moderation in the dollar rate, and again, the assumption that PMS prices will drop may not crystallize. So if those things do not crystallize, the expectation of a single-digit inflation figure in the near future is too far, it's too optimistic. I think that kind of expectation will, we should have a timeline of close to 10 years, given Nigeria's macroeconomic environment. Like I said, we've not had a single-digit inflation for more than 10 years, for almost 20 years. The last time we had that was quite long ago. and our macroeconomic variables do not support in the immediate, and I repeat, in the immediate, a single-digit inflation rate.
So I'm glad you brought up that, because I mean, when you talk about oil prices, that's beyond us. We're working in a deregulated environment for our oil and gas. So, you know, that is actually beyond our control. Now, another thing that the CBN governor talked about even before the meeting is the issue of FAC. And I know you mentioned 1.8 trillion is what was shared. That's feeding into inflation. And now, yesterday, we also talked about the issue of the new tax law, which should increase revenue for government. And then we see this also feeding into inflationary pressure. One of our guests yesterday was also featured in that report, Mr. Laje, talked about the issue of political activities coming up. We see the drum beats, they've started. And we know in Nigeria, political activities come with a lot of money being spent. That also is a potential pressure on inflation. So it does seem that we have a lot of negatives coming against us towards this cutting down of inflation.
Yes, absolutely. Like I said, it's very optimistic for anybody to expect that we're going to have single-digit inflation in the next couple of months. I think it's a far-fetched objective that the central bank must set a more realistic timeline. It's not something that will happen immediately. The pressures are going to come from multiple sources. We talked about even the exchange rate, depending on the fact that we're going to continue to increase crude production and crude prices are going to remain strong. But if crude price remains strong, so you have a stable exchange rate, but on the flip side of it, you're going to have a higher cost of petroleum products, which will feed into inflation. We talked about the insecurity, particularly as it relates to food prices. These factors are what is staring us in the face, and they are not likely going to drive they are not likely factor that will drive that inflation figure. The issue of election nearing expenditure. Unfortunately, the political environment has actually become very heightened. Only 2 years into the government, into the current administration. So we have seen decisions that will now be driven, we will now be seeing decisions that will be driven by political exigencies instead of core economic considerations. And those factors will always tend towards injecting liquidity into the economy, as well as creating a feel-good feel among citizens so that they can vote for particular political parties. These factors all feed on inflation. So I don't see, I can't relate with the expectation of a single-digit inflation in the immediate. Of course, it is achievable in the long term, but it will be driven by improved level of productivity in the economy.
Okay, so I guess the most realistic expectation is even when we meet in September, there will be a hold. What are some of the possible impacts of a hold? I know in Nigeria, sometimes when you talk about the MP, says, oh, it's not going to make any difference, so it's going to be a hold decision. And what are some of the possible impacts of a continuous hold decision at where we are, 27.5, and all other parameters are being held steady, and the central bank maintaining its tightened stance?
The thing about hold is that it just basically tells economic agents that the macroeconomic environment is relatively stable and that the central bank expects that current environment will subsist for some time, or there will be further improvement. Bear in mind that central bank has several other tools which they use to influence the economy. Unfortunately, there is some level of disconnect, or the level of connection between monetary policy rates and interest rate in the environment is very loose in Nigeria's particular environment. So what the central bank uses to influence economic activities or level of liquidity are other tools like the use of treasury bills auctions, the auctions of OMO instruments, intervention in the foreign exchange market. These are what the central bank have been using, and these are the factors that currently directing imposing the direction of economic agents' decisions. Take, for instance, the issue of managing foreign exchange rates. The central bank has used effectively the OMO and the OMO auctions and treasury bill sales to manage the foreign exchange position, as well as interventions in the market when the need arises. So in terms of economic agents, they are looking at what is the interest rate environment. Interest rate today tends in the region of 30% if you're a borrowing customer. If you're a prime customer, maybe you borrow at 29%, which does not reconcile with the 27%, 27.5% MPI. Bear in mind that there is an asymmetric corridor of plus 500 minus 100, which simply means that the standing deposit rate is 26.5%, that is minus 500 basis points, while at the standing lending rate is 32.5%, which is the rate that central bank lends to the banks. Ordinarily, in an environment where you have a strong interplay between the macroeconomic environment or monetary prices and the central bank monetary policy rate, then the minimum lending rate would have been in the region of that 32.5% plus a risk premium. But that's not what we have. Then if you look at even the treasury bills situation, at the last auction of treasury bills, the central bank sold treasury bills 364-day instruments at something like 16.3%. And then what is the connection between that and the monetary policy rate? There's no clear nexus between them. Neither do you have a connection between the 16.3% and inflation rate of 2.2%. So we have a peculiar macro monetary policy environment that the central bank is using other tools that are more effective than even the monetary policy rate.
Okay, all right. We'll see how the central bank will use that, at least before we meet on in September, and see what the results will bring. Thank you so much for your time and your views this morning, Mr. Johnson Chukwu, Chief Executive Officer at Cowrie Asset Management Limited.
Thank you for having me.